So what are other institutions saying about the CPI data report for tomorrow? What's going on, team? It's Ricky here with TechBud Solutions. I'm here to pretty much answer that question that everyone is asking is what's going to happen tomorrow. Although I do not have an exact answer in the sense of, well, I can't predict the future. I thought that it would be of value for all the people that are new to the stock market to get a better understanding of what other larger institutions are expecting for tomorrow's CPI data report. I really hope that you learned something new. Friendly reminder, I am going to be live streaming it for free here on this YouTube channel. And yes, I am talking about the CPI data report. All I ask you to do is get this video to over 1,500 likes. And again, I will see you tomorrow, 1 hour before the market opens for that CPI data report live stream. Make sure you guys subscribe and turn on those post notifications so YouTube alerts you when it is that I go live. Quick little summary on SQQQ, 13,800 on the day, no position on TQs as you can tell, and then on QQQ, overall market just ended up selling off for NASDAQ 0.64%. So what are other institutions saying for the CPI data report? So these are their estimates, their expectation. So we have Barclays at an expectation of 5.1%. Friendly reminder, current inflation rate is 6%. We have Bloomberg 5.1%, HSBC 5.1%, Morgan Stanley 5.1%, TD Securities 5.1%, UBS 5.1%, 5.1%, 5.1, 5.1, 5.1, 5.2, 5.2, 5.2, 5.3, 5.3, and Visa with the highest expectation at 5.4. The median is 5.1%. Now, what exactly does this mean? Well, again, this is where you can actually get that information for that CPI data report, and that is at bls.gov/CPI. This is the actual official website. Again, my goal here on this YouTube channel is for you to not have to depend on anyone. So if you actually want the website on where the actual CPI data report is going to be released, I always have this window saved. It's just very useful to always be able to go back. A question a lot of people are asking is, well, Ricky, what exactly does this mean, right? Let's say that forget about what banking institutions are saying, right? They all came in lower than expected. And that's what I wanted you to understand, that not just the market, but these institutions believe that tomorrow's CPI data report, the inflation rate will go from 6% all the way down to 5.1%, or pretty much below what the expectation is of 5.2%. We can see this on investing.com that the current expectation is 5.2. So going from 6% down to 5.2, how is that calculated, right? People are asking me, Ricky, does that mean that we have to see a 0.8% drop in the month of March, which is getting reported tomorrow, for our inflation rate? No, it's the way that the actual CPI data report is calculated. And I wanted to actually explain this to you. So this was the last CPI data report that was released in March. But again, just like every other CPI data report, like tomorrow, it's always a prorated month, right? Meaning that April is not complete, so therefore we can't report April yet. We're reporting for last month, which is the month of March, right? March gets released tomorrow, just like February got released last month, right? So this is the most recent one, then we get a new one tomorrow. But as you guys can see, the way that it's calculated is we drop the previous month and then we add a new one. So to think that, okay, well, we just need to see a decrease in the month of March. That's not how it works. We actually dropped the month of March of last year, right? So we dropped this one, which was and this is where it begins to get very interesting, because this was during the time that inflation was ramping up very aggressively. So this is why we've seen pretty significant drops this year, because inflation isn't increasing as much as it was last year. So because of how the CPI data report or the CPI formula works, by being able to remove this off of the formula, as long as we're not increasing as much as we removed, right? Because if we can remove a full point and we only add, again, the current expectation is to only see an increase of about 0.3%, that would put us pretty close to what is to be expected of the 5.2% for tomorrow. You might be asking, well, Ricky, we currently sit at 6 by removing 1 point, right? So we remove the month of March. That puts us at 5% inflation rate. And then whatever tomorrow gets reported, we just add that to it. It's not a perfect formula like that, or it's not just, adding what gets reported tomorrow. There's an actual formula to it. And again, you can look it up if you want to, but it's how it all gets kind of like seasonally adjusted is the best way for me to put it. But I wanted you to understand that of how it gets calculated. We remove the previous month of last year, which was March. That's what's going to get removed tomorrow. And then we add the new month of March, which is going to be reported. So if we sit at 6 right away when we remove this, we go back to 5, right? And then we add whatever it is that just gets added. It's not going to be an exact 0.2, right? But because of how it gets seasonally adjusted, then again, the expectation still puts us at 5.2%, but we can see an increase of 5.3%, and we'll still come in at 5.2% for overall inflation, right? And the expectation for core CPI is for it to rise 0.4% in the month of March, which again, based off of the drop that we'll see for the last month of March, it should adjust. But overall, I wanted you to have an understanding of how this was adjusted. Now, the last question some people were asking is, well, what does this mean for the overall market? This is, according to Goldman Sachs, their expectations on how the market will react. So if we come in less than 6%, right? If we come in greater than 6%, S&P 500 will sell off at least 2%, which means NASDAQ will probably sell off more, right? If we come in at 5.2 to 6%, so that's in between, that's not in as expected, but that's in between 5.2 to 6%. So that's still seeing a drop on inflation, but not as much as expected. We should see a 1 to 2% sell-off. If we come in at 4.6% or 5.1, meaning less than people expected, right? Less than the market expected. The stock market rallies, right? And then 50 to 100 basis points is what they're expecting. And then the last thing is 4.6%. The market rallies at least 2%. So best case scenario is if it comes in anything lower than 4.6%, we should see a greater than 2% rally. If we come in anything higher than 6%, we will come in with a 2% sell-off. If we come in between 5.2 to 6, we should see a 1 to 2% sell-off. And from 4.6 to 5.1, we should see, again, a much smaller rally. This is how I feel. We just posted this little meme on TechBud's Instagram. Again, it's just to kind of bring some humor to what is a very serious report. But we got the bulls and we got the bears. As you can tell, again, I have no shame in sharing what it is that the market is expecting. You can see that the entire market believes that we will come in lower than expected. Huge banking institutions all believe that we will come in lower than expected. So why am I making this video? Well, I want you to know, right? I want you to understand, first off, how it's being calculated, but I also want you to understand what analysts and what banking institutions are expecting for tomorrow's CPI data report. Now, at the end of the day, no one can predict the future. These are all just estimates. But again, everyone is expecting for this report to come in lower than expected. So I know the last report did come in lower than expected. It's just going to be very interesting to see. If we actually come in higher than expected, then are most of these banking institutions wrong, right? And then how is the Federal Reserve going to react? We have a very interesting week ahead of us. And again, I'm just excited to bring you guys along and to keep you guys up to date so you don't have to do all of the work yourself. But again, all I ask you to do is to drop a thumbs up on this video if it's not too much to ask. And of course, to consider subscribing and turning on your post notifications so YouTube notifies you when it is that I go live for the CPI data report tomorrow. So I really do appreciate you guys' time. I hope that we're under thumbs up in this video. If you guys have any questions, feel free to comment down below or shoot me a direct message via Instagram or Discord. And that's the first or third link in the description down below. And friendly reminder, I do trade live every morning. And if you want a little bit more information on that, that's that second link in the description down below. Don't forget to enter our GTR giveaway. And that's that fourth link in the description down below. Everything is linked down below. Don't forget to stay connected. And like always, let's make sure that we end the year on a green note. Take it easy, team.